Hey, Boris Musheyev here, and in this video I'm really going to talk to you about how to pay yourself as an LLC owner. You need to watch this video until the end to really understand how to pay yourself as an LLC owner and how to do it the right way. All right, ready? Let's go. All right, first of all, before we get started, you really have to understand what is really an LLC and how it pays taxes before we really start talking about how to pay yourself as an LLC owner. LLC stands for Limited Liability Company. That means that the owners, or really referred to as members, right? You're not considered an owner or not referred to as an owner, but you considered as member. But we're gonna refer to it as owner, okay? As an owner of LLC, you enjoy the liability protection against the creditors. But by the IRS tax code, you are considered a disregarded entity, meaning to say you're still protected from the liability, but you will be filing taxes as a sole proprietor. If you're a single member LLC, if you're a multi-member LLC, you will file taxes as a partnership. A lot of business owners form a business or an LLC with their spouse. Now that is considered a partnership LLC. Now, while being a single member LLC, you do not file a separate tax return. For an LLC, you file everything under your personal 1040 Schedule C. As a LLC owner with a partner or with your spouse, you would file a separate business tax return, which is a Form 1065, a partnership return, right? So for the sake of this video, we're really going to focus on you being an LLC owner as a sole proprietor, meaning say you're the only owner or a partner with your spouse, okay? So LLC, like we said earlier, does not file its own taxes, nor does it pay its own taxes. LLC is considered a pass-through entity. That means all income earned in an LLC is passed through to its owners, whether it's one owner, owner with partners, or owner with spouse. All of that income is really reported on their personal tax return. Now, like I said earlier, IRS considers you a disregarded entity. That means as an LLC owner, you will file taxes on your personal tax return. All the income and expenses will be reported on a Schedule C of your tax return. You will report all the income and all the expenses, no different than when you were a sole proprietor. If you were a sole proprietor, all of that net income is subject to taxes on your personal federal income tax return. When I say taxes, right, meaning to say in your tax bracket that you're in. Like I said, the LLC does not pay its own taxes. That means you will pay taxes on the net earnings of an LLC. You will pay federal, you will pay state, and you will pay what I like to call a penalty for having an LLC, right? You will pay self-employment 15.3% tax on your LLC. So again, you're going to pay federal, state, and 15.3% self-employment tax. That means it is a Social Security and Medicare tax double. For example, when you work for when you used to work for somebody, you received a paycheck. On that paycheck, you paid Social Security and Medicare tax. Well, what you don't know, maybe you did know, is that your employer also matched that Social Security Medicare tax and paid it for you. Now, the IRS says if you work for yourself, you're going to pay that Social Security Medicare tax as an employer and as an employee of yourself. And that is the 15.3%. Okay, now before we really talk about how to pay yourself as an LLC, let's first understand about how LLC pays taxes on your personal tax return. Like we said, it pays taxes on federal, state, and self-employment taxes. Now, what does it really pay taxes on? Let's say you have a net profit of $100,000 after all of your expenses. And out of the $100,000, you took out $70,000 for yourself. Now, what will you pay taxes on? On the leftover $30,000 or on the entire $100,000? The answer is on the entire $100,000, because whatever LLC earned, it passes through to your personal income tax return. It doesn't matter how much money you took out of an LLC, you pay taxes on the net earnings of your business, on the net earnings of your LLC. So this entire $100,000 will be subject to federal, state, and self-employment taxes of 15.3%, regardless of how much money you took out for an LLC. You might say, wait a second, but I've got $30,000 left over and it's going to be in my bank, which is going to carry over to the next year. Would I have to pay tax on it again? No. right? Because you've already paid taxes on this, you're free to go into the bank account and take that money out. Now that we understand what is really LLC, how it files taxes, and how it pays taxes, let's talk about how you as an owner can actually take the money out of an LLC. Ready? Let's go. All right, awesome. So now think about it this way. Your LLC earned $100,000. Can you go into your bank account and just take the money out? The answer is yes. And you don't have to do it as a W-2 employee. As a matter of fact, IRS doesn't want you to be a W-2 employee when you are a member of LLC, because that goes against the rules and regulations. As a member of an LLC, you will already pay self-employment tax on your entire net profit. That means when you take the money out of your LLC, that is considered owner distribution or partner distribution or member draws. Whatever one of those names you want to use, the bottom line point is that it is owner distribution. You go into the bank account and you take the money out. Remember in our previous example when I said when the business earned $100,000 and you took out $70,000? Well, guess what? You're not paying taxes on what you're taking out as owner distributions. You're paying taxes on the net earnings of $100,000 before, right? So too over here, you just take the money out as an owner draws. You don't pay any taxes, right? There's no taxes coming out on that money when you're paying yourself owner distribution. But at the end of the year, you will still be subject to taxes on the entire $100,000. Now, in order not to be in a situation where you have to pay a lot of taxes at the end of the year, just make sure to pay your taxes quarterly or set enough money aside every quarter to be able to pay taxes on your net earnings. And you can do that by basically calculating your net profit every quarter. So for example, the first quarter of the year, January till the end of the March, the business earned $30,000 after all expenses. You only took out $15,000, let's just use $20,000. You only took out $20,000 for yourself for your living expenses. You've got $10,000 left over. Remember, you are paying tax on the entire net profit, which is $30,000. That means you have to set money aside to pay for taxes for the $30,000, and you can do that every quarter. So at the end of the year, you don't end up with a big tax bill. Now, how can you pay your taxes to the IRS if it's not coming out of your draws, so to speak, like it would on a paycheck? Very simple. If you go to the irs.gov and you go to IRS Direct Pay, even if you Google IRS Direct Pay, it will bring you straight to the IRS website on the page where you can submit your quarterly estimated tax payments. The form is fairly simple. It'll ask you a couple of questions based on your last year's return, your filing status, your address, and your social security number. And then it say, what do you want to do? You say you want to pay estimated taxes, and you submit that estimated taxes. So again, as an LLC owner, you can take owner distributions. You will not pay tax on it every time you take the money out. If you took the money out 5 times a month, no, you should really put money aside to pay taxes every quarter. And remember, you are paying tax on the net profit of an LLC and not just on the distributions of an LLC. Thank you so much, and I hope this was helpful. Take care.